Good morning, Josh. How's it going today?
Well, it's a good morning.
It is a good morning.
It's a good morning.
It's a great morning. I woke up today and I was like, things just feel freer. Things just feel better. I don't know what it is. Any ideas why I could be feeling a strange sense of freedom right now, Josh?
I don't know. Maybe we're not going to have to be like sneaking in our unvaccinated bootcamp attendees to our event. Like maybe they can just walk through the front door like regular people today. Like
I know.
I can say that now, right?
Yeah, we can say that.
I can say that now.
I don't know what the statute of limitations is on sneaking unvaccinated people into our bootcamp a few years ago. But anyways, I think that has gone, that craziness. But yeah, no, things feel really good. I'm feeling good about things that happened this last week.
The West Edmonton Mall people chasing us around, that was interesting.
Oh yeah, that was awesome. The West Edmonton Mall police, they're running around making sure we weren't sneaking people in the back door. That craziness, Can we check your Vax card? And I had like a fake one made up. It was awesome.
Yeah. I mean, welcome back, everybody, to Beat the Odds of Business and Wealth podcast here. It's been for some of us who just look at numbers. The last few years have been a little bit trying, but I think we're back to some real issues now.
All right.
I think we're back to some real issues. And today we're going to be talking about how the Trump administration is actually going to affect Canadians.
All right. Yeah, it's already affected me, Josh. Like I'm feeling better. I got hope for the future. I think the next 4 years there's some positivity that's going to happen simply because the change in administration and how things how his policies and how the policies of the new Trump administration are going to hopefully spill over into some decisions that are made in Canada.
Yeah.
Not only tax-wise, but let's get into some of the things like on the health front as well, and of course investments in Bitcoin and going on. So, what do you want to talk about today?
Well, I mean, we'll build on last time because we talked about the elections in general.
Yep.
But now we know the direction. So, like the main fear that I had, the main fear is Democrats win the election. They have a massive fiscal spending platform, and that gives the Trudeau administration freedom to do a massive fiscal spend, i.e. a universal basic income. And unfortunately, too many people are very short-term thinking, and I that might be the Hail Mary comeback pass that would have worked. It would be terrible long-term, but all the negative effects from universal basic income will show up in a year or two, not a budget that happens in March and an election that happens in October. Like, you wouldn't see the negative effects yet, right?
That's one of those things where it's a lagging factor, right? Where we see the effects of the election a year or two later, right?
That's in the rearview mirror now, because I don't think the Trump administration is going to have that sort of fiscal program spending, to the extent where if the Canadian government introduced something that radical, I think the dollar would become the peso overnight, and it just wouldn't work immediately. Right? Like, it wouldn't work immediately. So, I don't think it'll work. I don't think there's any way out at this point. I think the Trudeau administration is boxed in. It's like they're just, hoping to get their pension. They're just going to ride out the wave until October, right?
Yeah. Ride out. Go off into the sunset, Mr. Trudeau. Go off right off into the sunset, and hopefully we never hear from you again, because it's been hard.
It's been a disaster by every economic measure. It's just been a disaster, right? But I mean, that's we make decisions on where the puck is going, right? So there's no point lamenting on where we are now.
For sure.
It's where the puck is going.
We've got less than a year to the next federal election in Canada. Less than a year. So it's October 20th. I think that's when that happens. So guys, vote like your life depends on it. And get out there.
In some respects, I don't like the calls for I don't actually really want the early election or let's let the RCMP investigate. It's like just vote them out and never hear from them again, because the problems that you got to fix in this country are probably it'd be very difficult to do in one term. So you need to let someone kind of wallow in it a little bit, so it's an overwhelming victory. So someone gets a real mandate that they get a couple terms to really implement some policy, right? So
I agree. It's going to take a lot of change to fundamentally recover from the DEI, the woke policies, and the crazy financial things that have been done, the theft, the corruption. the taxation, and really the carte blanche check that has been given to Trudeau and company to kind of just, pilfer the Canadian taxpayer.
Yeah. So, I mean, the first thing, let's talk about the, some of the short-term negative outcomes that will happen because of the Trump administration. And, you might view them as negative, or, I would say that they're kind of necessary, but negative would be the tariffs that are going to come. So you're going to have some tariffs, but I don't want, people need to understand Trump, like, what's Trump's book? It's The Art of the Deal.
Yes.
And so he's going to over-threaten tariffs, and he is going to implement some tariffs, but he's not going to implement as many tariffs as he alluded to. That is the art of the deal, people. That's how it works. Like, Trump is, some people might love him or hate him, but recognize that there's only about 3,000 billionaires on planet Earth, and he's one of them. So, 8 billion people on planet Earth, 3,000 of them are billionaires. It's like, yeah, he had a 200 million head start from an inheritance, but like, he didn't mess it up. A lot of people have messed up. There's a lot more people who've messed up $200 million being inherited rather than, turn it into $5 billion.
Oh,
so,
for sure. I mean, if you didn't have, the wherewithal, the acumen, and, just the personality to take that 200 million and turn it into billions, you could easily like ruin your life and get rid of that, like, in a short order. Right?
There would be billionaires that I detest, like a George Soros, but I'm watching the documentary. I'm still a student. I still want to know what happened, how he thought. Like it's still, it's still impressive in an evil way. I actually want to understand the fundamentals of it, because it's like you have to be very astute, right? So even when someone you don't like acquires that wealth, it's like you need to understand how it happened, because they didn't do it because they were an idiot. So it's very, very important to to kind of realize, like, to have that humility to look at people like that, to say that they're not idiots, right? And so I wouldn't jump to that conclusion. So we're talking like the two industries probably in the crosshairs: lumber and dairy, right?
Yeah, lumber and dairy. So we've got a cartel in the dairy sector, right? Mainly, I believe it's to secure a lot of the votes in Quebec. And they're also, because they're subsidizing and they're controlling the supply, like, we pay a ridiculous amount for dairy in Canada. But because of those subsidies, they're selling cheaper milk products to the U.S., right?
Yeah, I mean, okay. If you have to have a subsidy to guarantee your own country has supply, that's one thing. But when you have a subsidy to the extent that it allows to not just fulfill the supply in your own country, but flood a neighboring country's market with, cheap products, it's like, that's kind of what tariffs are for. It's kind of to, like, avoid that I don't know, for better term, like the jackassery, right?
Yeah.
And really, when you really sit there and think about it, it's like, that's not really an effective use of our tax dollars either. Like, in the immediate term, it's like, okay, I guess it keeps people working. But in the long term, it's like, you're really just subsidizing an inefficient industry that isn't going to survive on its own, right? And so, in the short term, it's going to hurt. And in the long term, it's going to, hopefully redeploy capital to a more efficient area. So, that's just kind of the reality of it, right? Those are single digits. I think I was looking them up this morning. It's like, between the two of them, those are, call it 4% of our GDP or something like that. And so let's just say they have let's be pessimistic, and they have a 20% downturn. Okay, they got a 20% downturn. It's like, so you're talking 20% of 4% people. So
very small.
It's a reduction. It's going to hurt. It's coming, and it's, for the long term. It might be warranted, because that's not where I want my tax dollars going in the long term, is to create an industry that can subsidize and undercut foreign industries. Like, that's
and what really irks me is, a video came online on X, I think it was early this year, and it was a dairy farmer in Canada that he basically had to dump all of the milk. Just had to dump it all because he produced too much. So all of his cows are being milked. He's feeding them. He's taking care of them, paying for vet bills, energy bills, and so forth, for the milk to just get dumped down the drain. Why couldn't that be sold and given to like people who are underprivileged? Why couldn't we do something else with that? Sell it to a different market. That kind of really pisses me off that we're dumping good food down the drain in order to help the cartel in Canada. But that's just my opinion.
Then but we look at these tariffs, and then there's kind of two options. There are two possible outcomes. It's like, okay, is the U.S. going to get rolling in their economy again? And I want to pull something up on the screen because I've pulled up, and I think we've talked about the Canadian money supply before.
Yep.
But I don't know if we've talked about like the U.S. money supply. And so it's incredibly, incredibly tight, right? You look at this is a long-term historical, and you can see the massive increase in the money supply. It was actually much more significant. It was actually much more significant increase in the money supply in the U.S. than it was in Canada. It was basically the U.S. exporting their inflation to the rest of the world.
Let's do a zoom in on that.
Yeah. So if you zoom in to here, it's just like here we go. It's like clicking along at 14 trillion. Kind of in 2019, we'll call it even 15 trillion, and then bang, 21, 22 trillion. Like just absolutely massive expansion of the money supply. But since then, it's actually been one of the tightest fiscal periods in history. Where the M2 money supply was 21 trillion in April of 2022. And it's actually under that a little bit, but effectively it's still 21 trillion, 2.5 years later. So that's a really, if you do not increase that money supply, it's like it's not really going to get cooking. If you look at under the hood in the U.S. too, it's like they got a lot of the same stuff that were happening in Canada. You look at their jobs numbers, it's like they're inflated and they're continually revised down, and we start looking at what's driving it. It's public sector jobs that are driving it, not private sector jobs. That's just not a sustainable outlook, right? And so if you have two scenarios, if you have one where it's like just increase of fiscal spending and potentially looking towards a debt spiral in the U.S., which is our largest trading partner, or you have the U.S. that's basically going in the right direction but implements some tariffs on a couple of industries, which one is the tougher situation? It's like the tougher situation is that the U.S. economy is in a recession. Like,
for sure.
If the U.S. economy is in a recession, tariffs or not, that's harder, right? Mm-hmm. But if the U.S. economy is cooking and we have a couple of tariffs to deal with, comparatively speaking, that's an easier situation for us to deal with.
Yeah,
right?
kind of a nothing burger in comparison with a booming U.S. economy. If that goes raging for the next 4 years coming up, that is only going to benefit Canada because, like you said, they're our largest trading partner. They need some of the raw materials that we've got, including energy. Right? Energy is a huge, huge component of what we provide for them.
This is why I've always, remained bullish on Canada. And this is kind of my thought process in most of the world. I think most of the world they're going to see what happens to the U.S. dollar. Like you can already see the exodus for the people coming to the boot camp, or I'm just going to show you the exact stats of the exodus out of the U.S. dollar and into gold around the world. It's like you're not looking for a Lehman Brothers moment there where that's gonna implode, but like you can just slowly see them selling off U.S. Treasuries and buying gold. It's been happening for a decade now, so that's going to continue to happen, and so it's going to turn into the countries, I believe, the countries that have resources and the ones that don't have resources. Like it's going to become very, very binary and very, very difficult to outperform if you're not in one of those boats, right? So like, can you be a Switzerland and outperform despite not having a significant amount of you can, and that's a great example because they might do it, but there'll be very few examples like that. It's going to be less, dominated with the U.S. dollar enforcing their will because the demand for U.S. Treasuries will be smaller and smaller, but the demand for resources will be the true, will be the true equalizer, right? And, really the path out for Canada has always been the same way. It's higher productivity, natural resource jobs. Like,
yes,
that is the path out. And we don't just have to sell them to the U.S. We can sell them to wherever they want, right? And does the U.S. need our oil? It's like, you heard Trump and he's talking, he's like, we have more oil than Saudi Arabia. Well, unless we includes Canada, you don't. You just don't. Mathematically,
we
do
we have
so
that
who
many
is
resources,
the we?
right?
Because those oil reserves are pretty poignant, right? When I talk to my American friends, they're radically surprised that the province of Alberta has more oil than the entirety of the U.S. Like the province of Alberta, probably even most Canadians would be surprised to know that the province of Alberta has more proven oil reserves than the entirety of the U.S. And that's just a mathematical fact, right?
Yeah, in the Americas, we have North America, we have the largest reserves, proven oil reserves, more than all of North America.
Yeah.
And we're third in the world. Third in the world. Amazing.
People point to Venezuela. They're like, oh, Venezuela has so much oil. Dig deeper on Venezuela. And anyone who says that, dig deeper. The oil is further in the ground. It's at a deeper depth than the Canadian oil sands. The terrain is not as consistent. So it's, it's soft in some places, more dense in other places. That makes it much more costly to mine. A significant, more of the portion is actually offshore. So you see that big number in Venezuela, but proximity to the U.S., it matters. It's further away. It's harder to ship it there. And B, it's more costly to mine it there. So unless they were dramatically better run than Canada, it's like Canada will still be the better option. And so, we could run Canada dramatically worse and still be run dramatically better than Venezuela.
Well, I think that's part of the problem. I agree with Kevin Leary. Canada is one of the richest countries in the world with very poor management.
Yeah.
Hopefully we get some better management.
Yeah, and so that's why I can continue. The U.S. economy gets cooking. When you look at the underlying U.S. energy reserves, when we start looking at it, it's like if the economies around the world are rolling, they use more energy. That's just how it works. And when you really look at shale wells and how much oil they actually have, it's like they're very short-lived. They just do not have as much. Okay, so when you're trying to get oil out of shale wells, it's like it's more costly. They don't last for the same length period of time, and so eventually the U.S. will become more and more constricted on energy. Proportionally speaking, Canada has a ridiculous amount of wealth of resources, and what's the main threat to oil and gas? It's not solar and wind; it's nuclear. And where is the most high-grade plutonium in the world? It's in southern Saskatchewan. Yeah. That's just where it is. That's just where it is. So this is kind of an easy assignment, really. It's not going to. We don't have to be Switzerland to have a high quality of life. We don't have to be that well run for this to work okay, right? And so I think there's going to be a lot of transition, as we kind of deal with where the U.S. dollar is and its attractiveness. Although I think Trump has some very interesting plans with a Bitcoin reserve that we're going to walk through walk through at the boot camp. But if you just take it at face value, it's like the U.S. dollar has become less and less attractive to the international community, and that's not a perception. It's just you can just tell by their holdings decreasing the amount. The BRICS countries have less U.S. dollars now than they did 10 years ago, and even if they had the same amount as they did 10 years ago, they would be worth considerably less, right? That's just it's just a statistical fact, right? I think some people write that off because some of the people who tell that tale tell it like it's falling tomorrow. The BRICS currency's coming out. No, it's not. No. It's not coming out tomorrow. That's not how it works. It's a continued and relentless weakening of that instrument, basically. So,
Yeah, well, I mean, here's the thing. Like, people should be looking at it and paying attention to what's going on with BRICS, because it's not nothing, right? It's not nothing. I think you're going to be sharing at the bootcamp the significance, like the actual population size, the amount of gold they've got in those BRICS nations.
Oh, it's massive.
And so forth.
They're massive power, right? Because they actually do control a significant portion of the resources, right? And Saudi Arabia has been kind of the linchpin. Am I in? Am I out? Am I in? Am I out? And they're not committed, right? Like, which I think is kind of smart for them. If I was them, that's probably the position I would have too. Play both sides and try to get the best deal, right? And potentially continue to play both sides. So that's in their best interest.
So the art of the deal.
I don't blame them for it. Like, that's what you should do, right?
That's what
you're in charge of a country.
That's what sovereign nations should
do the best for your people, right?
100%.
And because if not, you just get this globalist groupthink, and no one actually has any good, unique ideas, right? We just all continue down the same path of potentially a bad idea, right? And there's no competition, no new ideas, and that's a problem.
Yeah,
right?
and we need the opposite. We need to get back to a golden age of human activity by being productive, being inventors, being the people with ingenuity.
And I mean, Trump intends to trade with Canada. I mean, look, we would have had the Keystone XL built, except Biden turfed it the first day in office.
Yeah.
Like, this is what really adds to the GDP per capita. People talk about the GDP per capita. It's like, yeah, you want some guy working at $200,000 a year in Fort McMurray, not someone coding in the Greater Toronto area who just graduated from Diploma Mill for $40,000 a year. Like, that's like, come on, man.
Or
like,
some mid-level management bureaucrat that is in some kind of a government department. That doesn't really add to the economy at all. They're not producing or creating anything.
They're worse. They're a negative impact.
They're negative.
At least the guy doing the coding is adding something, right? It's and so, like, overall, I'm bullish. Like, you have to expect the short-term pain, but that's a market rebalancing. That's the market telling you that those industries were never productive to begin with. Like, directing human capital in areas that aren't, when the market doesn't support what they're doing, it's like that doesn't add to the quality of people's lives long term, right? In fact, it's just continually a detriment. It's just stealing from our future productivity with interest to do that. Like, that's all that we're doing. So in the short term, we're gonna have some bumps, right? Potentially even the dollar, right? Potentially even the dollar. U.S. Federal Reserve cut another quarter point, right? Hopefully the Bank of Canada is not, hopefully they don't just, like, there's no reason to do half a point and half a point and half a point. It's like, it's got to go down. We all know it's going down. Like, don't look like you're in a panic. Like, just at least put on the brave face that you can do it a quarter point at a time, right? Like, I think we all kind of know the reality of it, but who knows, right?
Yeah.
And again, regardless of how fast they go down, it's like, that's just a short-term volatility. So, like, the important part is people need to just expand their time horizons, because we're trying to make financial decisions here, right? And so it's like, you don't really care about the value of your assets next year. It's like, anything in a year is a short term, right? Anything 1 to 10 years is medium term. 10 years plus is long term, right?
Sure.
And so, like, we're deploying our capital long term. It's like, I'm still holding Canadian stocks and Canadian real estate because we have a lot of resources here.
We do.
And I see it as a very safe bet, right? And I still have for all the crazy taxes that we pay in Canada, the small business tax rate, it's still very aggressive and far superior to anything you can get in the U.S. And that blows people's mind, that there is no small business rate that would be better in the U.S., right? It's like, it's funny because I get clients sometimes and like, I want to move to the U.S. It's like, if you really want to reduce your taxes, maybe you should try the Cayman Islands or Dubai, because you go to the U.S. as a business owner, and what you're doing is that your taxes are going up, not down. And they're shocked because they've just watched too many YouTube videos.
Yes.
On tax rates and how the U.S. is a better tax system. Canadian tax is high. It's like, yeah, it is for most of the employees, but for business owners, like, no, there's nothing comparable to the 11% rate in the U.S. It just doesn't exist. So it's 20% or more, depending on what you're doing. So, I guess the synopsis is, in the short term, you're going to expect some volatility and potentially a pullback and some challenges because of it. In the long term, it's like, as long as Trump gets that ship moving in the right direction economically, then that's actually an easier task for Canada, because ultimately they need the resources that we have in the ground, and it's a pretty easy task to sell them, right? And so hopefully that gives someone kind of the confidence to make some decisions and continue on their path of beating the odds at Money and Wealth.
All right, right on. Thanks, Josh. Thank you so much, and thanks for watching us. Don't forget to like and subscribe and share this information out to as many Canadians as you possibly can. Thanks. We'll see you next time.